After Volcker, what gold is really signaling? Flint West reporting. In 1980, the system blinked. Inflation had been running hot for nearly a decade. Bretton Woods was dead. The gold window was closed. Oil shocks had ripped through the global economy twice. Real rates were deeply negative, and nobody trusted paper promises anymore. Gold didn't ask politely. Gold went vertical. By late 1979, gold was trading more than 2 times above its 200-week moving average, a level it almost never reaches. Capital wasn't speculating. Capital was fleeing. That was money saying, "I don't believe you." And then Paul Volcker answered, not with words, with pain. Fed funds went to nearly 20%. Mortgage rates blew past 18%. Housing collapsed. Unemployment surged. Recession was not a risk, it was the tool. The message was simple and brutal. We will destroy demand before we debase the dollar further. And it worked, not because it was elegant, because it was survivable. Debt to GDP was roughly 30 to 35%. The population was young. Manufacturing still existed. Political tolerance for pain was real. The system could take the hit. Gold peaked in January 1980. Then it fell hard, nearly 60% nominally over the next 2 years. And people misread that lesson. They said gold failed. What actually happened is gold forced discipline, and discipline won. For 40 years. Now fast forward. Same signal, different system. Today, gold is again pressing toward extreme deviations from its long-term trend. Again, flirting with levels approaching 2 times the 200-week moving average. And again, the reflex is to say, this looks like a blow-off. Maybe $5,000, maybe a frenzy, maybe a top. But that framing misses the point, because the question isn't where gold goes. The question is what policy can do about it. And the answer, this time, is very different. Debt to GDP is no longer 35%. It's 120% and higher. And that's being charitable. At 5% rates, the United States government already spends more on interest than on national defense. Pensions are duration mismatched. Banks sit on long-dated bond losses, marked held to maturity. Housing affordability is already broken. Politics cannot tolerate a Volcker-style recession, let alone survive it. This isn't about willingness. It's about math. Volcker's playbook is mathematically unavailable. To restore deeply positive real rates today, the kind that crushed gold in 1980, would likely trigger sovereign debt stress, fiscal dominance, forced monetization, or outright policy reversal. The cure would collapse the patient. So if gold goes vertical now, it isn't screaming about inflation. It's screaming about constraint. In 1980, gold screamed. The system answered with pain. Order was restored. In 2025, gold screaming would imply something else entirely. It would imply that markets no longer believe monetary credibility can be restored without breaking the system itself. That's a different signal. Gold above 2 times its long-term trend today wouldn't mean tighten harder. It would mean there is no hard enough. It would mean real rates cannot be made decisively positive without cascading failure. It would mean the store of value function is being quietly outsourced. It would mean the yield illusion, the idea that nominal returns equal safety, has finally collapsed. This is why a $5,000 gold print wouldn't be a victory lap. It would be a disclosure. A moment where fiat debasement becomes indisputable, where United States dollar hegemony shifts from trusted to merely tolerated, where central banks lose narrative control, not because they lied, but because they ran out of room. Gold doesn't campaign. It doesn't forecast. It doesn't care about your models. Gold just prices truth slowly until it doesn't. And when it stops being slow, the system is already late. So when you feel that instinct, God help us if this happens, that's not alarmism. That's pattern recognition. Because gold doesn't end systems. It reveals whether they still have a way out. And this time, the signal is not that inflation is too high. It's that the exit may be closed. Flint West signing off.